Hello, Orchard Project friends, family. We are so glad to have you here. Hi, my name is Grace Parker. She, her, hers are my pronouns. I am the artistic and development liaison at the Orchard Project. I am a 25-year-old white woman with red lipstick on, pink headphones, my hair in a bun, and wearing a fuzzy pink sweater. I will now toss it over to Jully to quickly introduce herself before we get going into the event.
Thank you, Grace. Hi, everyone. My name is Xiaoyue Zhang, pronoun she, her, hers. I am an associate producer at the Orchard Project. Very happy to be here today with y'all. And I am a 27-year-old Asian woman with dark hair just touching middle length, just touching my shoulder. I'm wearing a white polka dot shirt today. I have my bookshelf on my left or right side, depending on screen, and some plants in the background. I'm gonna pass it to Morgan.
Oh, before we jump right into introducing moderators and panelists, just so Orchard Project voices can go away and we can hand it over to our wonderful guests today. We have a chat box on the link you're all on. Please feel free to submit questions there. And what was the other thing? Oh, the other thing is we have an ASL interpreter, Brandon, with us today. We're so lucky to have him. We will go ahead and pin Brandon's video, although since we have few enough people, he should be very visible to anybody who needs them. Okay, I think that's it. Let us know if you have tech problems.
Sorry, my internet got interrupted for a second. Grace, would you also want to give a short introduction to today's session and also OP for All?
Absolutely. So this is the inaugural event for OP for All, which is our institutional effort to make the knowledge and resources of the Orchard Project not only available to our panelists over the summer, but to our very wide range of Orchard Project friends and families. So thank you so much for being here today. Today's session will focus on taxes and financial literacy. We have some wonderful guests, and we want you to be involved in this process. So don't hesitate to send us your questions. We are here to serve you, and we are so grateful to you for joining us. Jully, is there anything you think I've forgotten?
I think that's all. Thank you so much.
Okay, we're gonna go off video now, and I will hand it to Morgan to introduce themselves and get us going. Bye, everybody. Enjoy.
I'm Morgan Johnson. I use they, them pronouns. I'm a freelance arts worker. I am a dark-skinned, Black, queer, non-binary person with curly hair, about shoulder length. Sorry for the truck. I'm wearing a sage-colored button-down. Oh, and I'll be moderating the panel today. I don't remember if I said that. Kristen or Jully-Alma, would you like to introduce yourself?
Julie, I'll let you go first since you're going to go first in the presentation.
Sure. Hi, everyone. My name is Jully-Alma Taveras. I am the founder of Investing Latina, an organization that's focused on bringing financial literacy and investing literacy to those who have always been marginalized and those that need it the most. I personally right now have my hair to the side. It's curly. I'm wearing a cream color shirt that says Investing Latina on it. And there's a plant behind me to give a little bit of ambiance. I'm really looking forward to being here and to spreading all of the knowledge that I have, because my goal in life is to the day that I leave this earth, I won't have an ounce of knowledge left inside of me. So if you have any questions, please drop them in the chat box. We are here to answer them for you. And on that note, I'll pass it over to Kristen.
Well, that's great. Hi, my name is Kristen. My pronouns are she, her. I am a production attorney. I work for a production company based in Los Angeles, California, where I support production and development on unscripted television shows, everything from docuseries, docu-soaps, competition television, you name it, we do it. So it's really exciting to be here today and to get an opportunity to talk with artists about how to best structure deals when you're working with production companies or you're entering into contract agreements and you're not quite sure how you want to get paid out or what's the best way to get paid out or what the tax implications will be as you get to the end of the year and you have to start filing paperwork. So that's what I'm here for today. I'm really excited to chat with everyone. Oh, and to describe myself, I am also a dark-skinned Black woman. So I have, braids. They're also pulled to the sides. We've got knotless braids here. So highly recommend them, very lightweight. I'm wearing a black colored shirt. And my background is there's a cycling bike behind me and I'm in a small office with lots of natural sunlight.
Okay, Julie, take it away.
All right, everyone, let's get started. I'm going to share my screen with everyone. Oh, I might need some assistance from the team to enable screen sharing. But in the meantime, while we get that going, I'll actually get started with a little bit of the presentation. I am going to be covering things around budgeting. I am going to be covering credit building and credit repair and some tips and tricks. I'm also going to be covering taxes and a little bit of an overview of how they actually work because who knows how taxes work, right? And then I will be covering some tips on investing. So I'm going to teach you a couple of things that you can learn to really get started if you haven't started, and maybe you have dabbled into it and started, but I will give you some tips to make it a very smooth and easy process for you so that you can secure your financial future. So a little bit of background on me. I was born in the Dominican Republic. My mother came to the United States when I was just 8 months old, and my father and the rest of my family helped raise me until my mom was able to obtain immigration paperwork for myself and my father. And I eventually came with him when I was 4.5 years old. I got thrown into an English class, not knowing any English, just having language as my first and only language. And guess what? I figured it out, right? I had friends that were just coming up to me and asking me questions that I didn't know the answer to, but we somehow built friendships. And what I ended up doing, we lived in Brooklyn. My parents have been small business owners. They had a bodega in the Bronx, and that's really how my parents were able to make ends meet and eventually be able to provide for me and my two siblings. One of them is actually I'm a teacher here in New York at FIT, and I also teach financial literacy personally, like as a side hustle. And then I have a younger sister who's studying psychology. And so we're 3 siblings, and my parents did everything they could to take care of us. What I do now related to personal finance is I write for the Huffington Post, I write for CNBC, and for Time Magazine's personal finance website, Next Advisor. Aside from that, I teach workshops like this one. And I also am a speaker, and I go out and I encourage people to learn more about financial literacy, because the fact is that we as a country, and oftentimes in many different communities, we're not taught these things by our family members, and we kind of have to figure it out on our own. And so this financial literacy, and I know Kristen can back me on this, the fact that this is what we're here to share and to spread the word on. I am now going to share my screen with everyone. And I am going to present. And these are just some pictures of the things that I had mentioned earlier. This is our cover that explains that we're understanding taxes, financial literacy, and we're creating a sort of freelance artist survival kit for all of you. There's a photo of me holding a microphone at a speaking event, and the companies that I've mentioned that I've worked for and that I freelance for. I also have a phone number that everyone is welcome to text me to. It is a community number. If you text $toolkit, I can send you this presentation. And that number is 917-636-4049. So budgeting, let's get started with budgeting, right? I am going to go over an example of what a budget can look like and how you can use the money that you bring in to take care of your needs and some extras. In general, there are a lot of different ways that you can go about how much you're spending and what, but I'm going to give you somewhat of a guideline. For those of you that might have never created a budget, this is kind of a good place that you can start. 25% of the income that you have coming in can go towards housing, and that might be rent or perhaps a mortgage if you own property. The next 15% can go to savings and or debts if you have any credit card debt, car notes, and things of that nature. The next 15% should be for things that protect you. So that is insurance, car insurance, medical insurance, life insurance. If you have dependents, life insurance is very important so that those dependents are taken care of if something were to happen to you. 10% can go towards donations, helping others, helping our community. If you're like me and you're an immigrant, you may have family back home, and that's something that we also contribute to so that they are taken care of in ways that are possible. The next 10% of income can go towards entertainment. We all need to be entertained. You know, we're human, we're thinkers, and we need some rest from the normal everyday work that we do. So entertainment is very important, but it's also important that you stick to 10% or below on entertainment. When it comes to food expenses, 10% of your income is also a good gauge that you can consider so that you are thinking about the things that you spend for what you spend on groceries, and also taking into consideration what you spend on dining out, picking up food outside of the home. 5% of income can go towards transportation. 5% can go towards personal needs. And I put a little emoji of getting a manicure because that's also, it can be a little bit relaxing, entertaining, but it's also personal care. And then the last 5% can go towards utilities like light bill or a phone bill, something that of that nature. So these are general guidelines on what you can do. There might be a situation where housing can be less. If you live in a high cost of living city, it can be more. New York, I'm in New York, it's expensive here. So oftentimes in New York, we're spending almost 30% of our income on housing. But this is just a general guide that you can use, and you can kind of cater it to your specific needs. What are some ways that you can budget if you've never done it before? Some apps that I recommend are You Need a Budget, it's YNAB abbreviated, or Every Dollar. Another way that you can do it is by having Google Sheets. And it's a spreadsheet that you can do, and I'm actually going to share a link with everyone. I'm going to stop the presentation for a second so that I can share the link on the chat right now, because this is a very simplified spreadsheet that I created, and I actually called it survival number. The reason why it's called survival number is because last year, actually right before last year, so end of 2019, I wanted to figure out exactly how much I needed to survive from a basic perspective as a human being. And so I came up with these 8 categories of the things that I needed personally. And I started listing what those expenses were and how much I would spend on a monthly basis on those things. So let me go into the chat. I am sharing that link, so everyone is welcome to go right in there if you'd like. And now I'm going to go back to sharing my presentation. This is essentially what the survival number budget sheet looks like. You can see here there are 8 categories that are summarized, but I do have details here on the left-hand side. This is already auto-calculated. So if you put numbers into the areas that are yellow, it will automatically calculate and it'll show up on this right-hand side chart. And the chart adds up to, after rent and utilities, groceries, dining out, transportation, household, clothing, health, and entertainment, the survival number adds up to $3,080. That is my basic survival number. Those are my basic needs. And remember what I said about entertainment. We have to have that in there. Mine's happens to be $57 for the year. And it's because I included Spotify. Music is something that inspires me very much, and it allows me to relax. And that is what I consider my entertainment. And of course, this is the baseline. So there are times where you could do a little bit more, but this is truly the starting point. For the year, that is a total of almost $37,000. That being said, doing this calculation and understanding that my basic needs are $37,000, I know that my income has to provide at least that amount. Okay, so that was the whole purpose of the survival number, and it has really helped me kind of take hold of my personal finances, and I hope that it can help you as well. So some general budgeting tips that I really like. Tell your money where to go. Stop wondering where it went. You want to, at the beginning of the month, today happens to be April 1st, tell your money where it's going to go. You may get it today, you may get it on the 15th or the 30th of the month, but you really want to give it direction, because if you don't give it direction, it's going to run loose. You want to also spend based on your values. You want to spend on things that truly matter to you. So be mindful of that and make sure that you understand what are the things that are important to me and what are the reasons why I am spending. Am I spending to appease someone else, or am I really spending based on something that I truly value? And a good example of spending on your values is, if you are a person that likes to work out, you like to go to the gym and lift weights, you may be the person that spends a little bit more on gym memberships. You might need to spend, $100 or $150 on gym membership because you value that. But if you're a person that doesn't necessarily do that and loves doing yoga right at home, your budget for that might be zero. You don't even need it because you can do it at home and you can stream it right online. So that's an example of how you can spend based on your values. Practice saying no. That word is hard. It's hard to say, and it's also hard to hear sometimes, but we have to practice saying it because that is how we find balance. You can't say yes to everything. You can have a little bit of all the things that make you happy, but you cannot have a lot of it, and you cannot say yes to everything. So the more that you can practice saying no, the more in control you will be of your spending. But always remember to be flexible and try different methods. It's important to have some flexibility and be able to, be okay with spending a little bit more sometimes, but knowing that, okay, because I overspent this previous month, this month I want to make sure that I am exactly right on budget or even below. But so essentially, I don't want you to be too hard on yourselves, and you want to also always try different things so that you can find a rhythm, a money rhythm that truly works for you. The next topic that I'm going to be covering is credit. So credit scores are such a thing. Everybody is like judged by their credit score. Whenever you want to make a purchase or take out a loan, the first thing they ask is, what is your credit score? And there is a scale from 300 to 850. That's the scale for credit scores. And if you are between 300 and 629, it's considered bad credit. And we'll talk about how bad credit happens. If it's between 630 and 689, fair. 690 to 719, that's considered good. So you're in a good place. And anything above 720 is excellent. So how exactly do we get excellent credit? Well, the number one thing is payment history. 35% of your credit score is based on how well you've made your payments and how consistent you have been with making your payments. Whenever there is a missed payments, there are points that will be deducted off of your credit score. The amount that you owe is the next most important thing. And not so much just the amount that you owe, but how much do you owe in proportion to what you have available to you. So if you have a credit card that allows you $1,000 limit and you're spending $300 on it, or you have a $300 credit debt on it, then you're using 30%, which is okay. But if you're using $900 out of those $1,000, that's 90% of the usage, and that will bring your score down. The next thing, 15% of your score is determined by credit history. So you want to be able to have relationships and hold on to those credit banking relationships. That means having one card for as long as possible, and also having other cards, but not canceling cards unless there is absolutely something that is bad about it. An example of something that could be bad about a credit card is if there's a fee on it. So it's important to at least have a card that you can depend on and you can have for a very, very long time, because that is what's going to establish that credit history. The final 20% is split up between the types of credit that you use and how many inquiries are on your credit report. So this means that if you have diversified type of credit, for example, credit cards, personal loans, student loans, and a mortgage, that shows that there's diversification and that you are able to manage different types of credit. However, that being said, don't feel like you have to go out and buy a house or get a card note just to diversify your credit. That's not necessary. Only thing I have on my reports are credit cards, and I have an excellent credit score. So don't ever feel pressure to get into debt in order to have a good credit score. And of course, the last thing is credit inquiries. Every time that you put a request to get a credit card, about 10 points are taken off of your credit score. So just keep that in mind and try your best to limit how often you do that. As I mentioned before, credit tips, some of the credit tips, and the first one I already mentioned, keep your first card for as long as possible. Or at least if you opened up a card recently and it's the one that has the oldest history, try to hold on to it unless there is an annual fee or unless it's a company that you no longer want to work with. Another tip is to call every 6 months to get your credit line increase. This was really helpful to me because I was a person that happened to have had a lot of debt at one point, so much that I felt kind of suffocated by it. I was drowning in debt. But what I did is that I consistently called my credit cards and I made sure that they increased my credit line so that the usage decreased. And even though I was paying off the card, my usage kept going lower and lower as a percentage of the full amount that I had available because I requested these increases. They won't always give them to you. Some do, but they won't always give you increases. Make sure that you're asking for them. So you want to also time your credit inquiries, and my limit is 2 per year. You never want to ask for credits more than 2 times per year. And ultimately, your goal should be to have a $50,000 credit line. That is the point where your credit score is going to say you are excellent in terms of having available credit, but always making sure reducing any debt that you have and keeping it very limited, if possible, under 10%, and you'll be in a good place. If there are any questions about budgeting and credit, feel free to ask them. You can ask them in the chat. If you are watching this as a replay later on, you can definitely feel free to text your question to the number that I mentioned earlier, and then I will be happy to answer it. You can also leave it in comments, and we can do our best to circle back and answer those questions for you. Now I'm going to move on and we're going to talk a little bit about how taxes work. So IRS.gov is your go-to place. It's everybody's go-to place. It is the place that actually allows us to see any updates that are shared by the IRS. IRS is Uncle Sam. That's the person that we always have to give a little bit of the money that we make to in order to pay for things for our community, and it's part of our society. So what is their goal? The IRS's goal is to provide American taxpayers top quality service by helping them understand and meet their tax responsibilities and enforce the law with integrity and fairness to all. This is quoted from their website, and that is their goal. So why are taxes so complicated? The reason why tax codes can be, or taxes in general, are so complicated is because tax codes are filled with a lot of contradicting revisions that are updated or repealed in every term of Congress. And so we just came into a new administration. Joe Biden is our president and Kamala Harris is our vice president. Yes. We are in the first session of the 117th term of Congress, and this was as of January 3rd, 2021. So that's a lot of terms that we've gone through, and every time that there is a new term, IRS tax codes are updated. That being said, let's think about what are our goals, your goals as an individual. As an individual, it's very important to understand the basics. You don't have to know everything, but you want to understand the basics.
It's 5 o'clock.
You want to be able to calculate what your responsibility is, and you want to strategically use a tax code to maximize your money and investments like retirement accounts and depreciating assets. You can hire a tax pro, you can hire a CPA, but remember, no one cares more about your money than you. You have to put your effort, you have to do your part to make sure that you are understanding how you can maximize the way that you use your money for yourself, for your family, and those in your community. Here are some really important rights that we have as individuals, as citizens, and also non-citizens living here in America. The Freedom of Information Act of 1967 allows us to access master files. And you can do all of this by going to irs.gov and creating an account. Another really great one is the Information Returns Program. It allows you access to income data reported to the IRS. This one I really like a lot, especially for freelance workers, especially for people that may not have a traditional job where it's all on one form and you'll get a form at the end of the year and you're done. But if you work for different people, different organizations, you may or may not get all of your paperwork when it's time. So something that's really important that you can use to your advantage is accessing the data that was reported to the IRS from that organization, because there are instances where if you didn't get your tax form, you didn't really keep track of the money that you made, you can always go to try to access that information based on what they reported on your behalf. So those are some really important rights that we all have to keep in mind. Why tax laws are passed. There are three main reasons why tax laws are passed. There are social goals, there are economic goals, and there are also political goals. So when it comes to the social element, it's to alleviate housing problems by giving tax breaks to those who invest in low-income housing. This is an example. Economic goals include stimulating manufacturing by allowing rapid tax write-offs to buyers for new business equipment. Political goals include insurance companies, oil companies, broadcasters and media, or even sports clubs who are wanting special treatment for whatever politics or business they run. So it's always very interesting why laws are passed. It's important to kind of keep those things in mind, that a lot of our tax laws go into place in order to alleviate social and economic goals, but there is also a lot of politics involved, and it's the reason why it can get very messy and complicated. So federal taxes, let's start there. There are two basic taxes, federal taxes and state taxes, okay? Federal taxes, all of us have to abide by the rules of federal taxes. State taxes will be determined by whichever state you live in. So how much we pay. In 1862, when we first started charging taxes or collecting taxes from individuals, the federal tax rate was 1%. Now in 2021, the federal tax rate can be as high as 37% for those earning more than $500,000 per year. But let's look at exactly what sort of bracket you may be in. And this is really important to understand because sometimes brackets can be confusing to people, but I'm going to break it down for you. The first $9,874 will be taxed at a 10% tax rate. And I'm looking at a chart right now, and the chart on the left-hand side says 10%, 12%, 22%, 24%, 32%, 35, and then 37%. And those are our tax brackets. So everyone falls under this rule, and we pay federal taxes based on these brackets. And as I mentioned a second ago, the first $9,875 get taxed at a 10% rate. The money that you make, that next dollar and up to $40,000, you pay 12% on that bracket. So the way that brackets work is you pay taxes like going upstairs. So that first step, 10%. The next step, the money that you earn on that step is 12%. After making $40,000, between $40,000 and $85,000, you're then paying 22% on just that amount. So it's as you earn the money, you are paying taxes on it. And ultimately, this will go up to 37% if you're making $518,000 or more. So something that's really key for all of us is to know what bracket you're in. And what essentially ends up happening is that based on this, you get an average. So if you're making, let's use the third line, which is 22% between 40,000 and 85,000, you will pay 22% on that amount, on those $45,000. But the prior $40,000 that you made, you're paying less. So ultimately it averages out and you're lowered in the percentage that you're paying to around a total of 19% if you make that income per year. So the chart can be, this is, by the way, for a single person. If you are single filing on your own, if you are married and filing jointly, the brackets change slightly, and I will actually provide a resource where you can kind of look at it and dig into it a little bit further for your specific situation. I mentioned federal taxes. Now, this is a visual of the US map that talks about state taxes and what the percentage is on state taxes. So it can be very expensive in a place like New York, or it could be very inexpensive in a place like Oregon. So it really depends on what state that you're in, and you want to be sure that you keep in mind that federal taxes are one thing and then state taxes are another thing. Now that we talked a little bit about brackets, federal taxes, and state taxes, let's talk about how to save on taxes. That's always like the fun part, right? The standard deduction for 2021 is $12,550. So what this means is that as soon as you file your returns for your taxes in the next tax year, or maybe some of you are still filing it for 2020, like I am, I still haven't done mine yet. It's important to keep in mind what the standard deduction is. It goes up every so often. Right now it's at $12,500. And what this means is that you can easily just take the standard deduction and not worry about itemizing things. However, it's going to be important for people that are freelancers and people that work for themselves, like many of you that are here or that will be watching this a little later on, to know that there is another option besides the standard deduction, and that's itemized deductions. So it would make sense to choose itemized deductions if everything that you're going to itemize is going to be higher than that $12,000 standard deduction. What are some things that you can itemize? A home office, which is up to 10% of expenses. You can itemize continuing education. You can itemize your car, so 56 cents per mile. You can deduct half of your self-employment taxes, which self-employment taxes are a combination of 12% Social Security tax and almost 3% Medicare tax on net earnings. So you can deduct 50% of that. So that's a nice little bonus for those of us that file taxes as self-employed and we pay self-employment tax. Credit card or loan interest for a business. And like if you work for yourself, you can really organize all of your business expenses and make sure that you are keeping them very separate. That's going to help you when it comes to tax time. Keep separate accounts. Make sure that if you are using credit cards to fund your business, make sure that it's a business card that is completely separate so that you can deduct the interest that you pay on that money that you're borrowing. Phone and internet, business travel, meals for this year, and this was for 2020 as well, 100% of business meals can be deducted. Previously, it was only 50%. So this was a change that actually happened post-pandemic. So those are some things that you can note. And there is actually a link embedded in here where you can see a fuller list. It's not full, it's not inclusive, but it gives you a lot of other little things that you can decide to deduct. And essentially what you want to do is keep track of these things throughout the year would be ideal. And if you see that you're going over $12,000 in expenses when you file your returns in January of next year, you can consider taking itemized deduction over the standard deduction. Now, I'm going to move on and talk about investing. This is going to be our final part before we can take some questions and have a dialogue with Kristen here. Let's invest to reduce taxes. Okay, this is something that's like a really big perk about investing into the stock market specifically, but I am going to give you an overview of different investment strategies. There's a stock market, there's real estate, and there is also business. So when you're investing in the stock market, you can use target date funds, you can invest into index funds and ETFs, dividend investing. Companies like Coca-Cola and Disney, they will pay you to be an investor on a quarterly basis. Or you could do options trading, which is really just buying and selling stocks on a daily basis. For real estate, you can buy and flip property. Buy and rent property. You can fix and flip property like those shows that we watch on TV. You can wholesale property, which is really just kind of being a paper pusher and connecting people. Or you can do syndication, which is coming together as a collective, putting all of your monies together and buying a building, whether it be a commercial building, a residential building. That's called syndication. And then business. Small business lending is something that is a way for you to make money. You can lend money to a small business in your own community and charge a small amount of interest. And it's a way for you to help and to also earn a little bit of a return. You can create a product. You can provide a service, or you can build technology, which is really what's moving the world right now. I listed my phone number here once again, in case you would like to text me any questions that you may have, all about money. So I'm focusing on the stock market today. And what exactly is a stock market? It refers to the collection of markets where regular activities of buying, selling, and issuance of shares of publicly held companies take place. So the New York Stock Exchange and the NASDAQ are the two biggest exchanges in the world, and they have 2,400 and 3,300 companies respectively. Why does the market continue to go up? Maybe you hear it in the news, like all-time high, Tesla is at $1,000, like always something like new. Actually, the reason why we're at all-time high, or not necessarily, it is kind of the reason why, but the reason why the market always produces is because of two very important things: productivity and innovation. Companies in the capitalist society that we work in will always find ways to spend less money and make their business or their product or service easier and better. And that is really, it has to do with productivity. So if they're cutting on costs in some ways, which, you know, can of course affect people along the way, they're increasing productivity and therefore also increasing profits. And then innovation, creating things that never existed before. Zoom, you know, it didn't exist before and we're using it today, and it's one of the biggest companies out there today, and one of the companies that have really kind of changed the way that we've been able to navigate this particular situation that we're in. Before you invest, you have to decide, do I pay taxes now or later? I know you guys thought that we were done with taxes, but no, it doesn't end there. It's always something that we have to kind of keep in mind. Something that's really important to consider, these three things. Do you have access to an employer-sponsored account? Even as a freelancer, you might be able to contribute to a company-sponsored account. Some corporations will have simple IRAs or SEP IRAs, and they give you a tax benefit. So it's really important to always ask your employer, even whether you're full-time or part-time, do I have access to an employer-sponsored account? You also want to decide, do I want a traditional career path or an entrepreneurial career path? And for the most part, a lot of you here might actually be entrepreneurs. You have your own business, you're a freelancer, you're working for multiple businesses, and that's something that's really great, and it's going to be something that's going to matter, and I'll show you why in a second. And also, do you expect to earn more or less money when you retire? This is a really important question because it can allow you to make decisions every tax year and invest based on the response to that answer. So these are a couple of types of accounts. 401k are company-sponsored accounts. 403b are for nonprofit organizations. And then IRAs are individual retirement arrangements that you can open on your own. And I listed them here depending on what your style is. If you have a traditional career path, let's use a nurse as an example, where you're going to work, you know, in your nursing career for 30 years and then you're going to retire and be done. A 401k is really great because what happens is that you're paying taxes when you retire, when you're no longer working. You want to be able to arrange it so that you're paying taxes on years that are most beneficial. Remember that chart that I showed earlier, those brackets? The more money you make, the more taxes you have to pay. But by choosing these accounts and investing through these accounts, you actually take deductions and you reduce how much you're paying, because it looks like you're earning less money because you're shoving it into one of these types of accounts. So it's really important to know that company-sponsored accounts can be available to you. And if they're not, an IRA is always an option. You literally just have to open it up with a broker, and I'll mention some a little later on. I also have a list or a category here that says retire early. There are some people that are interested in retiring early, maybe at 40 or 45. How do you do that? Well, you have to make sure that you focus and that you invest a lot of your money, more than 50% of your income. That's how people that retire early are able to do it, because if you invest more than 50% of your income, that money is working for you in the stock market, and then eventually it'll make more money than you will be earning. Here are some contributions. You can take a screenshot of this. It's really important to know this is for the 2021 tax year. If it's a company-sponsored account, we have a high limit of $19,500. If it's an IRA, the ones that we open on our own, if we don't have a company-sponsored account, the limit is $6,000. Something that I want to add as a caveat in here is that if you open up an account, if you have an IRA because you work for yourself, you also have the ability to do a solo 401k. So that means that under your business, let's say you are a freelance artist and you open up an LLC under your business, you can actually create a company sponsored account under your company. So it's really important to keep that in mind. It will allow you to invest more money and ultimately save more in taxes. And then the brokerage, you will have no limit on how much you can invest, and gifted money can also go into a brokerage account. Whereas in traditional, in the first two categories, it has to be income earned. So once you establish how you're paying taxes and which account you want to use, it's kind of like a 3-step process. Then you determine what you're going to invest in. And one of the simplest ways that you can invest is by using index funds. So I'm going to talk a little bit about index, and I'm going to speed it up just a tiny bit because I want to make sure that we get in any questions that you may have. But the stock market uses indexes, and some of these popular indexes are the S&P 500, NASDAQ Composite, the Dow Jones, and the Russell 3000. And you can see here what each of them represent. The S&P 500 is the top 500 companies in the US. The NASDAQ Composite is all the stocks in the NASDAQ, which are 3,300 stocks. The Dow Jones is the 30 largest companies in the US, and Russell 3000 are also the 3,000 biggest companies. So it's essentially a way to kind of summarize the stock market. And why is it wonderful to consider indexes and know what indexes are so that you can consider index funds? Because index funds are going to be a basket. Instead of having to decide each individual stock that you want to buy, should I buy Apple? Should I buy Tesla? Should I buy Microsoft? Should I buy Google? You don't have to do any of that work. You can literally invest into an index fund, very low maintenance, and you'll have a full fruit basket, I like to refer to it as, with a bunch of different stocks. Here's an example of an index fund. This is a Vanguard index fund, and it's called VTSAX. Some people call it VTSAX. The price is about $90. I took a screenshot of this picture so that you can see the volatility that can occur in the stock market. This was exactly 1 year ago when we first were in the pandemic, a little bit over a year ago. This was March 24th last year. And it dipped really, really low, and everybody got really scared and started selling off all of their stocks. But look where we are now. It climbed back up, and it's higher than how it was when we started last year. And this is all on Yahoo Finance. That is my go-to place for stock information. This is what's inside of that fund. A fund is a basket. You can go in and you can say, I'm going to spend these $90 to buy this fund, and I'm going to get all of these companies: Apple, Microsoft, Amazon, Facebook, Alphabet, which is Google, Johnson & Johnson, which has our vaccine, Berkshire Hathaway, Tesla, and Visa. So it's a really simplified way to invest. Some more examples of funds here. I won't list them out, but if you would like, you can take a screenshot and you can reference this presentation if you'd like in the future. There are also some funds that are on the lower end, so you don't have to have a lot of money to get started with investing. Literally $10 can get you a fund. And now to summarize my presentation, what happens when you invest $500 per month for 10 years? You would have saved and invested $60,000, and that investment, because it's in the stock market, because it's in those baskets with a mix of stocks in there, you would have $88,700. How about 30 years? 180 contributed, $606,000 in your account. And you can see here, a lot of it has to do with time. It's not so much the work that you're putting in, but it's the work that the collective, everybody that works for all of these companies, is doing for you, and time in the market. 40 years, 240,000 contributed and 1.2 million in your account. Not too bad. How you can start: pick an institution. These are my two favorites, Fidelity and Vanguard. You make your deposit, you choose your index funds, and you reinvest your dividends. and repeat. And remember that every time that you're using some of these accounts that I mentioned, you're also reducing your tax liability. So I'll give you an example. My sister last year, she was freelancing all year and she was not focused on her taxes. She didn't pay her quarterly taxes like you should if you're self-employed. And she had a bill of $3,000. So what did she do? She actually had, because she saved money, you know, she didn't spend it all, but she had money saved and she opened up an investment account, an IRA, a traditional IRA, and she reduced her tax bill by half by investing into that account. So it's always about finding little ways to save money. Taking charge of your financial life. Know your survival number, analyze your habits, write down your goals and dreams, and have one small financial win a day, whether that be saving on takeout and choosing to actually cook at home, or maybe you call your credit card and you got them to reduce your interest rate, or you started investing. That's every single day you can have a small financial win that can put you in a better place. And always invest and keep investing. Don't hesitate. We happen to be at all times high, but when the market starts to dip, don't get scared. Keep doing it. And that is the end of my presentation. You can text me your personal money questions at 917-636-4049. I will open up the floor to any questions you may have. I'm going to take a look at the chat. And I also want to invite Kristen to tell us all about her tricks and tips on how we can set things up as freelancers.
Wow. What is left? That was incredible.
Thank you. Thank you so much. I had to kind of like rush through a little bit of it because I don't want to take up too much time from everybody. We appreciate you being here, and definitely for those of you watching later on, share this with someone that this can help, because it's something that we all can learn and know a little bit more on.
Before Kristen starts, I'd like to at least ask 2 of these questions that are in the chat, and then get it started. So we have 2 questions from Andrew. If you are a freelance contractor and you are trying to determine how much you should save from your paychecks on taxes, how do you determine that? And I know that was like in your presentation a little bit.
Yeah. Kristen, do you actually want to answer this question?
Yeah, I mean, so I'll tell you what I personally do and I recommend is that I try to basically, I ask myself, how much am I going to make throughout the year, right? If I were to make the same consistent amount throughout the year, what would my taxes end up being like? That's the kind of best case scenario for you. And then based off that tax grid that you showed us earlier, I take the amounts out based off of that. So if I'm going to make up to $10,000 a year based off what I'm making now, I'm taking out 10% of it. Every time I go over that really $9,800 amount up until the top of that tax bracket, I'll take out 12% of that. And so that's how you can kind of, as they say, guesstimate what you're going to end up owing in taxes at the end of the year. Of course, you never know what kinds of deductions will come out and how the tax code will change, because it does change year to year. As we know, the budget has to get approved, as does the tax code. But that's a really good way to make sure that you've saved enough to pay. What you want to be is in a position to pay back. It's better to have more to pay back than less, right? You don't want to end up in a position in which you owe X number of dollars of, and I'm raising my hand to about my ear length, X number of dollars to, you owe that amount back, but you have so much less than that in the account. You want to make sure that you've got enough to cover the taxes at the end of the year. And so in that case, more is less, but also, being more conservative about your spending and being sort of very, broadly saving is going to be great for you in that instance. Hopefully that answers Andrew's question.
And he has another one. Do you save taxes by your employer's state or the one that you live in? What if you live in another state that your company works from?
I love that question too. Julie, do you mind if I take on this one as well? Great. So I'm in a very similar predicament. I work for a company that's based in California. I live in North Carolina. I recently moved from New York City. So my taxes are all over the place, as are most people as we go through the pandemic. The way you're going to be taxed is it's really two ways. You're going to be taxed as an employee and you're going to be taxed as a resident. You will have to pay taxes into the state in which you live in. So if you live in New York City, even if you work in Los Angeles, California, you will owe taxes to the municipality. New York is a really interesting place because you will both owe taxes to not only the state, but the city and the county in some instances. So make sure that you are, buffering those tax savings as much as you can. You won't just owe the feds at the end of the year. You'll owe the state of New York and, lots of other municipalities over you. In addition to that, let's say you do have this job in California, you will owe money on every dollar that you earn, technically, from the state of California. So you owe them taxes as well. What I recommend, and I should make a note, I'm not a tax professional. This is not legal advice. Ultimately, you will have to make your own decisions here. And I do encourage you to reach out to CPAs and professional tax preparers, as they'll be able to assist you as you move through the year. But what I do recommend is that, you try to keep a tally of everywhere that you've worked throughout the year, especially if you're freelance and you're working at different places. And you'll want to try to keep a fairly consistent address within states. That way you make sure that you are filing the correct tax filings. But keep in mind, you will have to file a state tax document at the end of the year for every state that you have lived in and every state that you have worked in over the year.
Okay, and then we have 2 LLC questions from Luke Sand. So Luke started an LLC last year. About half of his payments were funneled into an account attached to the LLC. The other half were sent to his personal account with no taxes taken out. How do I go about filing taxes with the new LLC?
Kristen, go right ahead.
Wow. All right. So I'll tell you. So you want to know about how to file. Well, Luke wants to know about how to file taxes with his new LLC. That is something that I don't specialize in on my side of things. But what I will say is that you're going to end up being double taxed here, right? So because you were paid individually as yourself, you're going to end up paying individual income taxes. Then you're going to end up paying taxes through the LLC as well. You also, I'm assuming this person may be paying themselves some sort of salary out of the LLC. And if not, I think that it's something you should possibly explore, as it will give you, an opportunity to basically have what they call an S Corp election for the LLC, which means that you're a small business, which gives you additional tax deductions that you can take out at that time. So when it comes to filing taxes for the LLC, I can't help you there. I'll be totally transparent about it. And as I will tell anyone, a good lawyer will say they don't know before they give you bad advice. So that's how you know I'm a great lawyer. So I don't know about filing taxes for your new LLC, but I do know that you're going to end up having to file both, a corporate form for your LLC and individual income taxes for the money that you brought in.
Yeah, and the only one thing that I'll add to that, Luke, is definitely consider how much exactly did you make that was not covered, that were where taxes were not taken out. You may not be in the position where you owe. Remember that we have a standard deduction of $12,000. So it's okay to kind of just lay things out. And you can use one of the services where you can test it out before you pay for anything, kind of like TurboTax does, and you can see what it can look like. The IRS has a calculator that you can use. I recommend that you go in every couple months and look at and test out that calculator. Type in how much you've earned so far. Type in what you may expect to earn if you are going to invest in some of the tax advantage accounts. Include that in there, and it's going to give you a sort of estimate. So it's really a great idea for you to kind of, if you're not in the position where you're already set up with one business account, one LLC, and you're making your quarterly payments, which is the ideal situation. You want to get to that, and you will at one point. You want to, throughout the year, just kind of analyze and reassess and keep track.
Kristen, can you talk more about what you do as a attorney and kind of like how you're helping your clients protect their assets, and kind of what is in your freelance survival toolkit, and like what are you driving forward with your clients as far as that goes?
Love that question. So instead of my clients, I'll talk about the group I'm most passionate about. I am passionate about my client, but I work for a production company. It's a big entity. And I know our audience here today primarily is on the other side of that. So they're the artists that we're brokering deals with when it comes to directors, writers, those issuing like motion rendering services, all of the post-production work. So I'll tell you a little bit about what I do and what's in my financial survival kit for all of the freelance artists that I talk to. So as a production attorney, what I do is I support any and every agreement that goes on for production and development from the start or the inception of television shows all the way through final exhibition on television. So with whether or not the first thing is, hey, I have an idea, I want to pitch this. So we're doing pitch agreements all the way through, okay, we're ready to deliver the episodes. And now it's time to do clearance on the issues and ask some questions about intellectual property rights. For most artists, then I get a chance to interact with both professionally and in my free time. Some of the biggest questions that I get, and I'll try to answer here today, is how should I be engaged, right? Am I an independent contractor or am I an employee of the company? And the difference between an independent contractor and an employee can be really vast, but the primary things that you want to keep in mind is that an independent contractor doesn't have the same type of relationship with the employer as an employee does. What that means is that the employer is responsible for paying out certain wages, with making certain withholdings for you if you are an employee, and ensuring that you have certain benefits such as healthcare insurance and other things of that nature. When you're an independent contractor, what we feel like is the benefit as the individual is that you get paid straight out without taxes being withheld, although you must later withhold your own taxes so that you can make sure that you pay accordingly to the state and the federal government when tax season comes up. The other thing that you'll have to note when you're an independent contractor is you're not getting those healthcare benefits or any of the other benefits that employees are traditionally required to provide their employees. As a result, you must also take care of those things on your own. What I've seen come up more often is, how do I, when I'm engaged, am I an independent contractor or am I an employee? That's the biggest question. So the thing I'll talk with you guys just very briefly about today is making the determination about whether or not you're an independent contractor, whether or not you're an employee, and the type of employee you are. Are you exempt or are you non-exempt? So let's talk about it. Are you an independent contractor? Independent contractors are individuals who typically provide services to businesses underneath their own direction and control. They're on a one-time basis, a short-term project, and that is the extent of your relationship with the company. Now, there are a number of other factors that will come up to determine whether or not you're an independent contractor, but traditionally, you're someone who is there on a short-term basis, trying to provide particular services for a particular project. Some questions that you might want to ask yourself when you're being engaged, or some questions that a company may ask you are, do you have your own office set up? Are you being paid as an individual? Do you have an LLC that's being set up? Yeah, the way that they pay you will basically have a determination about whether or not you really are an independent contractor, or whether or not, if this gets to litigation, if the courts are going to really question whether or not the employer was trying to get away from paying certain taxes, or whether or not you were trying to get away from paying certain taxes as labeling you as an independent contractor. So things that will help you is to establish the LLC, create an office space, someplace typically that's separate than your home, although that can be helpful these days as we're all working from home. Making sure that you're keeping your business expenses separate from your personal expenses. The other thing you don't want is for there to be what they call a piercing of the corporate veil, which is the idea that the company setup is just a shell and that it doesn't have its own identity separate from the individual who is actually lending out the services. So make sure that you keep all of the money separately: bills, expenses, gas. Now, this can be fairly difficult if you start to write off things like living expenses, or if your office is at home, but as much as you can keep them separate, I recommend it. The next thing that companies are going to ask is, they're going to want to know, do you have other employees? What kind of insurance do you have? Do you have workers' comp insurance for yourself? All of these things lend to the idea that the corporation that you have set up, or the LLC, is in fact its very own entity. If it becomes really difficult to determine whether or not you're an independent contractor, it might be to the benefit for an employee or for a company to actually list you as an employee. What's the difference? One of the major differences is obviously they're going to end up taking taxes out of what they pay you, which I think is to the benefit of anyone who ends up working for a company, primarily because it takes out the guesswork from what you're going to have to pay at the end of the year. They also may, depending on whether or not you're an exempt or non-exempt employee, owe you for overtime pay or double overtime pay for working on weekends. There are also labor laws in each state and federal labor laws, which will apply if you are an employee. One of the biggest cases that we've seen come up recently is with the giant company Uber, which recently in the UK, about a month and a half ago, determined that they were in fact an employer and that they did have to pay workers' benefits. California has also said this about Uber. So one of the biggest areas we're looking for in employment law is the determination about how Uber will be handled as they continue to grow in size and as they continue to face these questions from various drivers across the US and the globe as to whether or not they will be classified as an employer and if there are additional benefits that they need to provide. So those are sort of the basics for me when we make some recommendation on, how you need to get paid. So the first thing I would say is if you want to be paid as an independent contractor, which means, again, you don't have taxes paid out now, but also when you do have to pay taxes later, perhaps you're just paying taxes through the LLC and you're not paying as the individual, then you need to make sure that you're setting up that company once again as a completely separate entity from yourself. If you're not sure whether or not you're going to qualify as an independent contractor, then you'll want to be or chat with the company about actually hiring you as an employee, even if it's seasonal or temporarily. Then you'll have to go through filing the documents and the paperwork that's necessary there for you to make sure that you're getting the correct benefits, such as healthcare insurance and other fringe benefits that employees are required to pay on your behalf. So those are the basics that I have for my survival kit. So I'm really excited and hope that it was beneficial to some of the freelance artists who are here working with us today.
Thank you. And Jully-Alma, what's in your artist survival kit?
Yes, I think that it's really important. And somebody actually asked this question about keeping track. That to me, ever since I started doing that, has been so helpful. And it can be, even if you can't keep track of your own personal spending, as soon as you buy something for your business, as soon as there's an expense, and remember that the expenses related to working from home, your internet and your computer, if you use any Adobe software that you pay monthly for, all those things, put them on a small list. As soon as you see that bill come through or that deduction taken out of your account, list them out, and then slowly but surely really try to put all those bills on one business credit card. I think that has been really helpful for me to make sure that I know anything that's spent for for creating work for anybody else for under my business is under one card, and it allows me to pay it in full. I still get points off of it, so you get these little perks and bonuses. But, or if you have to carry a balance, you can deduct that interest. So I think that those are some things that are really important because, of course, as freelancers, we don't know when we're going to get the next job, or, how there is no necessarily financial repetition, right? I don't want to say stability because I think that there is stability in working freelance, but there's not always repetition in what we're bringing in. So it's important to kind of keep track of those things and slowly but surely really start to separate. I think that's one of the big things in my kit, and it has helped me save on taxes, save money in general. One other thing, just because you're putting it in your business account or funneling it through your business account doesn't mean you should get the nicest and fanciest thing. Be sharp, be wise, and make sure that you're asking for discounts, even if it's for your business. The same way that we can ask for discounts for our personal lives, do it for your business as well. Build relationships, because the more relationships that you build within your work and the frame that you create for your corporation, your little baby, the better it's going to be for you to not only have contacts that will help and support you, but also really establish new relationships that can ultimately help you expand and grow. And there was actually a question regarding PPP loans, which also is something that happened post-pandemic that I kind of wanted to address really quickly. And although, Morgan, you can tell me if there's another question that you want to put ahead of that.
Oh, go ahead.
Okay. But yes, because of the pandemic, of course, there have been so many things. For the first time ever, freelancers were able to get unemployment benefits. That's not something that had ever been done before. If you're in the situation where you lost income or you are, and I think most people, there have been some people that actually were able to get more jobs because of the pandemic and everybody working from home, and they can work for different states. I know that was the case for my sister, who's working for a production company in California, even though she's in New York, which may have not had happened if we weren't in this situation. But definitely take advantage of the things that are available to you. It's still not too late to apply for unemployment benefits if you lost wages. It can be backtracked, so make sure that you're doing that. Regarding the PPP loan, definitely for the people that already have LLCs established and that have records of business, it's going to be definitely much easier for you to do it. If you haven't had good record keeping, it becomes a little bit more difficult, but still not a reason to not apply. Okay, you can still do it. They're actually processing applications fairly quickly. People are getting approved fairly quickly. Just keep in mind that you do have to provide the documentation. They're giving you kind of like a window to provide documentation, but you're going to have to get it together, so you're going to have to sift through your personal expenses and weed out which ones were the business expenses so that you can present that in order to get your PPP loan forgiven. Okay, so that's something that you have to keep in mind. Don't take the loan and go shopping. Make sure that you're definitely using it in the wisest ways possible, and establishing that budget for your business is going to help you do that. How much should I be spending on this, on that, and so on and so forth.
Kristen, we have a question for you from Andrew. How do you recommend contractors for entertainment companies renegotiate their hourly rate and fees?
Wow, that's a great question. And I think it's not even just a tax question, but just a flat out negotiations question, which is really fun. So what I'll say is that every time you work on a new project, the price goes up. That adds experience to your bag. That tells the next employer, maybe at the very beginning, this was your first time working on this type of project. Well, 10 projects later, now you've got some additional tools in your toolkit. So maybe the first time you negotiate with them, it's, hey, this is my first time doing this. I'm working, fairly hard on this. My rate is XYZ. After you've done 10 of those, or after you have done several more, now let's say you're working with that same company again. Well, the first time you worked with me, I was very new. Now I'm a little more experienced. Because I'm more experienced, it's time my rate is now increased to ABC. If you get awards, if you have worked with certain types of people, add that to your experience list. I always tell people that every time you go into a new deal, it's an opportunity to negotiate a new rate and to negotiate it up. If you don't, then your baseline remains the same. But your base is basically the last thing that you were paid, but then add on top of that any experiences that you've had since that time. So that's typically what I would say. Again, everyone's negotiation tools are very different. But I think those are things that typically help people when they're trying to negotiate up.
Yeah, and I'll add to that. Let me make sure that I have this. I'll add to that. If you never base what you're going to make on a new project solely on what you made on a previous project. Every single budget is completely different. Your role, even though it may be similar, is expanding. That's inevitable. That's going to happen. So we talked about taxes all day today. Add taxes to your rate. Make sure that when you see someone tell you, okay, you're going to get this hourly rate, keep in mind now, oh, wait, well, I'm going to have to put 30% of that into taxes. So let me make sure that I'm adding an extra amount to there. So always go up. I know that it's something that could be a little bit hard sometimes because we don't know what to charge. And if you are in the situation where you really have no idea what to charge, I will tell you right now, call a friend up. Call somebody that you know that has done that role. Call somebody that is currently doing that role. Ask people on LinkedIn. Do whatever you have to do to get some sort of figure, to get some sort of number. Because what happens is if you don't do the research on what others are getting paid, you're never going to know how much you really can be making. You're always going to underprice yourself. So be very cautious of that, and don't be afraid to ask people. I think before it used to be a little more strange to ask people what they made, but I think that we're moving in the direction of being more transparent. And literally, even if you looked it up on Reddit, something that's like anonymous, you can find a lot of data, and ultimately data gives you negotiating power. Use the data that's out there, use your own self-confidence to really ask for more and to make sure that you're getting what you're due to get.
I think that's great. And I want to just add one point to that. Julie makes a really good point that there's a lot of data out there and you can figure out what other people are making. But the best part about it is, especially as new laws are coming up, places like New York, employers cannot ask you what you are currently making or what you made your last role. So they cannot base what they will pay you off what you have been paid, right? So you can volunteer the information, but they are not allowed to ask you that question anymore. So you don't feel anchored down just by, okay, on my last gig, I only made, X number of dollars. Add a 0 to that, or 2, depending on, how well you've done over the last, few months or years since you've worked on a gig like that. Use it to your advantage to try to negotiate a higher rate and a higher salary. And I think Julie also makes a great point that talk to people in your industry. You will be surprised to find out who makes what. And it's a great way for us to close the pay gap in this country for those who are impacted by it negatively, which typically tends to be women and women of color. So if you're out there, ask those questions, figure out what other people are making, and also use it to your advantage that most employers cannot ask you those questions in return.
I personally have been in the situation where they have asked me, well, how much did you make? And I actually used the number that I wanted them to give me as the number that I made. And they were like, oh, okay. So I'm like, yeah, well, that's how much I made. So I have to get at least that, but I'm really looking for this. And I added another 20%. And guess what? You negotiate, and I got somewhere in between. So not only like Kristen said, you could volunteer information and you can add the tax to it. You can add what you didn't get in your last job and make it in this new job. Okay. So just make sure that you are presenting the best way possible and showing them everything that you're capable of doing. Oftentimes we don't keep track of the successes that we've had in life. And then when we have to interview, we're like, well, what did I do? I didn't do anything. We can feel that way. So make sure that you're also keeping track of those successes.
All right. Yeah, I love all of these takes. These are amazing. Jully-Alma, I have a question for you. And this is like kind of a personal question, I guess. How important is like intention setting and strategy about money in terms of follow through and kind of like manifesting abundance? Like how much does that kind of play into financial literacy and I guess keeping up with yourself and continuing to encourage yourself to budget and to keep, setting these goals and boundaries for yourself?
Yes, it is super important for you to have positive self-talk about everything in life, but especially about money, because what happens with money is that you attract it. We don't chase money. We don't go out there and we're like, oh, let me make this money. No, money comes to you because of what you're providing to the world. So make sure that you kind of keep that in mind. And in order to have that positive flow and that positive energy with money, you have to set intentions, and you have to kind of be very specific about what they are. For some people, remember earlier in the presentation, I said 37,000 was my base number. That's my survival number. That survival number is essentially just all I need. Where does intention take me from there? My intention is to cover my survival number and have another $20,000 for the year so that I can provide for others, so that I can invest $10,000 of that money. So be very intentional at the beginning of every year. And one thing that I do want to say, Today is April 1st, and it is Financial Literacy Month. April is Financial Literacy Month. And for me, it's the new year. And I want to say that because your new year could be whenever you want it to be. So because I talk about personal finances, it's January 1st for me, right? So always set intentions set them whenever you want. And you don't have to follow a specific calendar. You can a lot of people will budget by paycheck. You can always start with your next paycheck and start from there. And yes, there are things that you might have to clean up, but of course, just start from there and see what you can do. And you'll see that you'll pick up good habits. The more you practice them, the better you're going to get at it. It took me almost 3 years to get out of debt, all of the consumer debt that I had, and all of the from being a shopaholic. I was a shopaholic before, and it took me 3 years to get out of that, but I dedicated myself to that. And the only reason I dedicated myself to that was because I didn't want to go back to that feeling of not having control. So if you want to live more stress-free, take control, set positive intentions, tell your money where it needs to go. Your money works for you. You don't work the other way around. It doesn't tell you what to do. You tell your money what to do. And therefore, you're going to create that positive relationship that's going to bring more abundance. It's going to allow you to de-stress, create more. And from creating more, we're providing more value, more jobs will come, more opportunities will come. And in general, we'll just be better people. And so that's what the mentality will really lead to. And make sure that you are always positive. Just because something went, even if you spent $40 on takeout last night, it happened. Make sure that it doesn't happen for at least another month and a half. Okay. Don't do it again, but be positive and don't beat yourself up about it, because what happens with money is that there's a lot of shame associated with it. And sometimes that shame, it can push us to be better, but oftentimes it pushes us to just have negative thoughts about ourselves and think of ourselves in that light or lack thereof. And that doesn't help us in any way. So shake off the shame, shake off what happened in the past, move forward and set new intentions, and have whenever you want, start a new year.
Can I add something to that, Julie? That just really spoke to me. I need to tell you that I was in the same boat as you. And, coming out of law school, I was 25. I was moving to New York, and it's a jungle out there. It's hard, and New York does not make it easy. And so, the way the world is currently set up now, most people go out into the real world with their first job, but they're in the negatives already. And it's really hard to crawl out of that. And, credit card companies, banks, it's not their intention to help you get out. It's something that you have to do on your own. Something that really helped me, Morgan, I'm going to tell you one app, Mint. I use Mint religiously. I've used so many financial tools, but Mint is great. And the reason why I bring it up is because, I think in the new age, we all sort of enjoy social media and being on our phones. And so, I just added another tool. I figured out where I was spending my time. I was spending it on my phone. So I created something on my phone that would bring me as much joy and excitement as watching hilarious videos on TikTok. And it's plugging in all of my financial responsibilities and what I'm bringing into Mint. And even when I did have a bad day, right? Even when I was ordering $40 in takeout and I wasn't supposed to be, it was great to see over time, I was still making progress. Or if I wasn't making progress, okay, I seriously need to turn around right now because this is going in the wrong direction. But Mint is great, right? Like it will tell you like you're this much closer to getting out of debt or you're this much closer to a goal. So I would say, one of the first things you need to do, as my mother always taught me, is put things on paper. And these days, paper is digital. So, download Mint, download an app, input it all. It's going to be so scary. It was for me to put how little at that time was in my checkings and how much was owed on my credit card bills. But I needed the reality check. I couldn't walk away from it. And seeing it every day when I looked at my phone and saying, okay, this is how much I've paid. This is how much I have. Until that number was like on the other side, you'll never get over that feeling. It's great. And so I definitely recommend you can always start with an app and go from there.
So we have about 3 more minutes. I just want to say thank you to the both of you for coming here and sharing your skills, sharing your knowledge with everyone. And I guess like a parting question could be, I don't know. I guess since we're kind of like reaching the end of the pandemic, not really, but almost there.
There, we're trying.
We're trying really hard. Like, what are you manifesting for like goals as we like continue to try to get out of the house?
Yeah, that's a good one. I would say that from a financial perspective, I think it's going to be a bit of a challenge after spending so many months in the house to not be tempted to go crazy once we're back out there. We're going to be like, oh my God, the bars are open again. Let's do this. We're going to start saying yes to everything. So I think that my goals will be to pace myself, you know? I think before we used to hear from our mother, you know, it's like a funny meme, like outside isn't going anywhere. And outside did end up going somewhere last year. It went away forever. Well, felt like was going to be forever, right? But it's still always important to pace yourself, continue to spend based on your values. Do the one thing that you really have been wanting to do for the past year and a half. That might be get together with friends and go to a bar. Do it, enjoy it, have fun, be mindful of what you're spending, you know, take the train there, get your mask on and take the train, don't Uber, and just be very intentional. So I think that that's what I'll leave everyone with. As we get back into the world, let's spend more time with the people that we care about and love. Let's take care of our personal finances so that the money can take care of us in the future and not be a burden to those around us. Okay, so I'll leave you with that. And that's kind of what I'm gonna try to stay focused on doing.
I love that. As we can wind down this period, one of the things I'm focusing on right now is to still try to take advantage of it as much as humanly possible. Right now, there's no pressure to be outside, no pressure to be anywhere. It's getting warm, things are opening up. So I'm on the other side of Julie. I'm using the glass half full, but I'm trying to save on every bill I possibly can for as long as I possibly can. So I am in North Carolina, actually with my family. So yes, you know, I know lots of lawyers and people who, you know, people think they have very high powered careers living at home with, you know, with whomever is at home with them right now, because it's a saving. So where you can save. If you can continue to save, do it while the gyms are closed. Keep working out outside while the bars are closed. Like continue to, cook at home and do all of those things that are going to help you save so that when things do really fully reopen and, we are in a place where we've reached this herd immunity, you can say, okay, I have taken full advantage of the period of time in which I can save as much as humanly possible. And I'm really ready to launch Pat out into the world. So don't, send yourself out there too early. Keep riding this as long as we possibly can. Save that money. And that's what I'm manifesting in this period.
Save that money. I love it.
Well, thank you to the both of you and to Brandon and Carly for interpreting for the event today and the Orchard Project team.
Thank you, Morgan. Thank you, Jully-Alma. Thank you, Kristen. This was wonderful and so inspiring. We're so glad to have you as part of the Orchard Project extended family. To everybody watching, if you enjoyed this conversation, stay tuned on our social media. Our Instagram is @orchard_project, and we will be posting about future Orchard Project for All offerings on there. We're also on Facebook and Twitter and all that good stuff. If you have anything you want to reach out to us about, we welcome your feedback. You can email me at grace@orchardproject.com. That's grace@orchardproject.com. Thank you so much to our wonderful panelists and moderator. This was a total joy.
It was an honor. Thank you, everyone. And I'm wishing everybody a great 2021. We still got tons of time to make beautiful things happen. And I'm also sending great vibes for a lot of creativity. Let's do it.
Absolutely. Thank you. Thank you. Thank you. It's been great to be here with you today.
And thank you so much to our ASL interpreters from Sign Nexus as well. What a joy.
Thank you, Carly. Thank you, Brandon. Bye,
All right,
everyone.
everyone. Bye. Have a good night.
You too.
Bye.